Welcome to the 13 Market Moves weekly show, guys. A real truth about trading. Very incredibly important video for those of you that are striving to become a better trader. In this video, we're going to show you specifically why certain traders lose and why certain traders win. And you're thinking right now, well, okay, what's the big deal? Isn't that how it is? Well, it shouldn't be so if they're taking the same trade. So the killer part here is same trade taken by two different traders. One trader makes 20 grand, another trader loses 2 or 3 grand. What is the difference? How the hell in the world can this even be possible? I'm going to show you exactly how this is possible. It all boils down to how you execute, how you enter and exit your trades, and more importantly, how do you go through the psychological process of trading? So this video, guys, again, very important if you are serious about becoming a better trader with options, stock options, specifically weekly options, and even crypto trading. So I'm going to show you this quick slide, okay? It's nothing spectacular, but it is here to demonstrate in a very simple form what is the difference between a regular trader who's basically catching short-term moves. So especially for the new traders, you may be just getting into trading, maybe you've been trading for a year or two, you're brand new. And what you're thinking, well, I'm going to go in and I'm going to take a trade, I'm going to make $100, and hey, I'm going to take another one, make another $100. And there's nothing wrong with that mentality, okay, until you go through thousands of trades like this and you realize that this shit simply doesn't work because it will not grow your account. And that is the main difference between regular stereotypical type of thinking when it comes to trading. Hey, the more day trades I'm going to take, the more money I'm going to make. Actually, the opposite is true. And here at 13 Market Moves, guys, we focus on the bigger move. So sometimes I get a question, okay, well, hey, 13 Market Moves. How many trades do you guys get right? How many trades do you get wrong? So there are traders out there, guys, that claim a 90% probability of getting the trade right. Now, there's actually nothing wrong with claiming that, okay? However, this is not the only thing you should be focusing as a day trader. It's actually not that difficult to get an 80-90% success rate on your trades if you're staying in them for 1 fucking minute and you're locking in $50, okay? You can do that, certainly. But this is a simple illustration to show you that this is not the way to make money in trading. So in this particular case, a trader can take 10 trades. So trade 1, he makes 100. Trade 2, he makes 100. Trade 3, he makes 100. Trade 10, he loses at the 100. Okay, so total profits on this trade is going to be $900. Okay, in the case with 13 Market Moves, hey, trade 1, zeroed out. Trade 2, no success. Trade 3, bust. Trade 4, 0. Trade 5 makes you 13 grand. Trade 6 makes you nothing again. And trade 7 is a loss. Trade 8 makes you 18,000. Trade 9, loser. Trade 10 makes you 7,000. Let's summarize the totals. 38 grand versus $900. Now, this is a very simplified version, okay? But the point of this illustration is this. The question is not, okay, what is your probability of getting the trade right? It's not whether you're getting 9 out of 10 trades right, okay? How much are you making on these trades? Because if you're claiming an 80 or 90% success rate on your trades, I guarantee you, you're not locking in $13,000, $7,000, $18,000. Now, if you're happy with scalping or short-term moves and you enjoy doing that, then fine. This is a video for those of you that are striving to get to a better level to where you can actually take less trades and make substantially more. So the question to ask here is not, okay, what is your probability rate, but how much do you actually get to keep over a certain amount of time after you take a number of trades, 10 trades, 50 trades, 100 trades, okay? That is, of course, if you stay true to your trading strategy 100% of the time. So some people will jump from this strategy to this strategy back and forth. But going back and forth doesn't work. Okay, it doesn't work in life, going back and forth with anything. Make up your mind, make a decision, and stick to it. Okay, and at some point you will have incredible success, which you cannot do in life and with trading. You cannot say, okay, one day I'm going to do this, another day I'm going to do this, and just stay with your decision, and you will be successful. It doesn't mean you will be successful today. It doesn't mean you're going to be successful tomorrow. But over time, you will be successful at whatever endeavor that you are pursuing. You just got to pick your method and stick to it. So again, another way to look at the trading methodology is, okay, are you focusing, hunting for home run type trades as we do here at 13 Market Moves? Because not every trade is going to be a home run. And even though some of these trades show 100% loss here, okay, not all the trades are 100% losses, and some of this you could lose 50%. Or, you know, I'm pointing here to a probability rate of 30%. 3 trades out of 10. But in reality, with 13 Market Moves, there are certain market environments where we're actually nailing 90% of the trades back to back to back to back. Guys, there are days where I trade and I take 7 out of 7 perfect trades. There are days where I have gone as many as 29 trades out of 30. But not with $100 gains. Okay, I'm talking about 400-500% returns up to, you know, 1,000-1,300% returns back to back on multiple trades. Okay, so the probability is going to vary. In certain instances, when you have a really good read on the market environment, your probability with 13 Market Moves is going to be way higher than 30%. But in certain instances, it is going to be nailed down to just getting a couple of trades, 2 or 3 trades out of 10. But that's all you need to grow your account if you stick to the strategy 100% of the time, and if you execute on it 100% of the time. So let me dive in here and give you a really good illustration of exactly what I talk about. But before I do that, okay, you should not cherry pick trades or you will lose. You should take every trade based off your methodology and focus on the execution of the trade precisely based off your methodology. But most of the traders, they don't even have a methodology. They don't have a trade structure that they follow. In other words, they basically move with how the market moves, and that's why they never catch any big substantial profits. So basically, think of it as this way. You don't want to be the guy that takes 4 losing trades in a row and misses the 5th trade that can make him $13,000, and misses the 5th trade that could make you $13,000, $18,000, $100,000 in certain instances. Okay, so the question is, what is the key difference between a trader who makes 400K and a guy who makes 400 bucks? Well, I tell you, it all boils down to the ability to focus on a bigger move and stay with the trade. It's the ability to focus on a bigger move and being able to stay with the trade. Once the trade is matching a certain search criteria and pattern criteria and whatever other criteria that you may be looking at, the goal is to stay with the trade until it fully develops. Now, most of the people, the moment they see the account in the green, they jump out. And therefore, they never succeed in trading because they're too damn emotional. Oh my God, my account is, oh, I'm making $500 in this trade. Well, let me jump out and move on to the next one. Hold on, this is a good trade. What the fuck are you doing jumping out of a good trade? Stay with it. So, and clearly the ability to focus on a bigger move and stay with the trade, it is not something that you can learn instantly in one day, but that is a skill that you can develop. It also boils down to when are the times to do so, and it needs to be matched with certain conditions in a particular stock, certain market conditions, certain sector conditions, certain conditions on the chart. In other words, you don't just blindly take a trade and stay with it forever. There's got to be reasoning behind it. There's got to be calculations behind it. So, but if I was to summarize it again in just one sentence, it's the ability of a trader to focus on the bigger move. Focus not on what's happening right now. Focus on where the trade is going next. And I'm going to give you some really good illustrations here, guys. So again, how's this possible? 2 traders, same trade. One guy makes 23K Another guy loses 8 grand. So let me break this down. Let's take a look at the chart of mRNA. mRNA, guys. And in a little bit, I'm actually going to break down the chart itself and give you the reasoning for the trade. Right now, I just want you to focus on the psychology here with me. Okay, so the psychology of the trade, we send out the alert Monday. And this is a daily chart, so it gives you sort of an overall view. But the initial alert to buy mRNA this week was on Monday. Okay, we said buy Monday calls. It coincides with this time frame on the chart right here. We said mRNA calls this week. We specified to buy 235, 240, 250, 260 strike calls when our mRNA was just slightly under 230 and slightly above 230. That was our initial entry. So the stock that day was trading between overall 230, 235 area. So let's move forward to give you a better view of the mRNA chart. Now this is a 5-day, 15-minute chart. In order to look at the chart, this was Monday morning between 9 and 11 a.m. This is when we send out the alert. So Monday alert to buy mRNA calls. This is a follow-up alert on Wednesday to add to mRNA calls when it was trading at a level of about 235, 240. And if you are working with an individual coach here, guys, you would have got multiple messages to add to the position throughout this time frame. You would have even gotten the message to buy mRNA on the dip yesterday on a Friday when it was dipping to a level of 272. You would have gotten an alert to buy mRNA calls on the dip. And this this move doesn't look huge, but for weekly options on a Friday, I mean, this was a 700-800% by itself right here. But stay with me as I'm walking you through this trade. I'm doing this with an intent not to make fun of anybody, guys. I'm doing this with an intent so hopefully after looking at this chart and going through some of the messages and interaction that I had personally had with traders, you would be able to identify some of the key weaknesses that you may need to focus in order to evolve into a more powerful trader. So again, the alert was sent here, and the alert in the alerts group was sent over here to add mRNA calls. So let's go to the actual alert. So that for some of the skeptics out there, you may be like, yeah, you're sure now you're pulling up the chart. No, guys, it's right here. The alert group right here. And it says Monday. It covers the strikes that we're suggesting on mRNA. But you can see it's 240 strike, 250, 260. All of these strikes, calls. Look where the message was sent out. 10:26 Eastern. Now, 10:26, mRNA calls. And we're buying BIB puts. BIB at the time was trading about 355. You guys know where the stock ended up. It hit low 320s by the end of the week. BKNG puts didn't do as good, but they were profitable at one point. It did drop below the 2150 on Friday. Now, add mRNA calls right here, guys. 338 Monday. We're talking Monday, July 12th. All this right here, all these action in the alert group pertains to this moment on the chart right here. Let's move forward. Okay, Wednesday. Okay, now this is Wednesday, okay? First alert was FSLR 90 puts, by the way, guys. This was a 700% trade right here. Add mRNA calls right here, guys. This is the message. Add mRNA calls 155. So you could have gotten in right here on Wednesday. So you've had multiple alerts leading you into this explosive move in the stock higher. Now let's analyze. We're going to look at trader 1, trader 2, and trader 3 to help you understand what's actually going on here. All right, so here's trader 1, gets the alert Monday, and clearly look at the message on here. So if you're working with me individually, you will actually get some of these messages before the alert group gets these messages. So that's one of the advantages of working with a coach, okay, is you will get some of these messages before the entire group does. And mRNA call 245 now, 2K. Look, this guy doesn't have a huge account. 2K trade, 245 calls at that point, guys. I mean, they were going for like a couple of dollars, okay? Because on Monday, look where we were. I mean, we're at 230. So at 230 bucks, I'm sending this trader a message to buy 245 mRNA calls with 2K. He could have easily bought, 5 to 10 contracts, easy. Easy. That would have not been a problem. And so I'm going to jump just a little bit ahead, and you can clearly see on Tuesday, already on Tuesday, right here. I mean, guys, right here, okay, I find out that he actually jumped out of the trade. So I sent him a message. I say, look, you can't jump in and out of trades like this. You'll never make money like that. Using this jump in, jump out just because your account temporarily goes negative, you will never make money as a trader if you do this shit. So if that pertains to you, you need to stop. You need to stop jumping in and out of trades. You are a victim of your P&L. So stop looking at your fucking P&L. Don't look at your profit and loss because it's causing you to jump out of good trades. You're sitting there, and instead of focusing on the chart, well, first you have to know some things to focus on the chart on to base your decisions off. And so if you're blindly looking at chart, and God forbid you are considering yourself a day trader, so you're looking at the 1 day, 1 minute chart, well, no shit. Things are going to look like, oh my God, this thing is collapsing. I got to get out right now. Guys, don't be a victim of a 1 day, 1 minute chart that is going to cause you to make an emotional decision to jump out of a trade. Now, the question is, all right, where would this guy be if he stayed with the trade? Well, this 10 calls of mRNA calls, 245 strike, they were worth between $40 and $45. So this guy literally, right here, he jumped out of a trade that would have made him at least $40,000. At least. And as you can see when we're getting on Monday, so Monday is going to be on a weekly option, your most expensive day to buy options. It doesn't necessarily mean it's the worst day to buy options. If you expect an explosive move to take place at any time, that would be exactly the reason why you should initiate your position on the Monday. But in this particular instance, okay, he gets in right here, and when the market opens up the next day, what happens? Well, you're losing money. Why are you losing money? Like, with options, right? If you're trading stocks, it's not a big deal, okay? Maybe you got in at, 232, and or let's say you got in at the higher level Monday. Let's say you got this at 10:09, but you're like, well, no, Leo, I'm going to sit and watch this. So you didn't get at 230 or 229. You could have gotten in at 229, but you waited all day and it just kept going higher and higher, and you said, okay, I'm going to get in right here. So don't make that mistake. I mean, timing is everything when it comes to weekly options. So when you get a mess, you got to take action, guys. You can't sit there, think about it 28 times. Later in the video, I'm going to give you another crazy example that it's going to blow your mind. So like, watch the psychology of this. It's super, super important. Okay, basically, let's say you got in. Let's say he's getting in at 234, 235. Then the next day, the stock dips what? $2-3. So automatically he sees his account in the red, and he gets out of a trade that could have made him $40,000. So this is trader one. Takes the trade, jumps out the next day. Why? Because of this conditioning of a day trader. A day trader thinks, well, I'm taking this trade, and if for whatever reason, okay, my account is not in the green tomorrow, oh, fuck, I got to jump the fuck out. No, that's not how this works. If you take a trade right here and all the conditions why you were taking the trade, which I'm going to touch upon here in just a few minutes, if all the conditions are still met, look, it's a $230 stock, okay? Would you be jumping out? Let's say you were trading a $10 stock. Would you be jumping if your stock dropped from $10 to $9.94? Would you? Well, that's exactly what this trader does right here. I mean, this stock moves $2-3 lower. He sees his account profit and loss going temporarily negative. He jumps out. He wants to cut, but he's not focusing on the chart. He's focusing on his P&L. That's why he's making this mistake. So, guys, if that pertains to you, if you can solve this, it's going to allow you to have an explosive growth as a trader. In order to do that, guys, you can click the link below and sign up to work with a coach here at 13 Market Moves. So the next trader, I mean, we'll call him trader 2. All right, so very similar conditions, even though I'm personally encouraging this guy to stay with the trade. Now, this is Tuesday, right? So the guy takes the trade win. On Monday, he gets the alert. Tuesday, here's Tuesday. I'm sending him messages. Okay, stay with all trades. Don't panic. All right? And yeah, the guy's got some bad trades there, guys. I mean, some of these trades, there were bad entries. Some of these trades were brutal. Okay, but look, he does own 5 mRNA calls. Look at the strike on this, $240 strike. He bought them at $3.50. $3.50. I mean, so the 245s were going for like dollar and some change, $1.80. Okay, the 240s were going for $3.50 at the time he pulled the trigger. So that's his cost. Guys, understand that these very option was worth almost $50 right here by Friday. And yeah, you're going to say, well, but Leonardo, it's impossible to stay with the trade for this long. No, it's not. Not if you understand the reasoning behind the trade and you stick to the 13 market moves methodology of why you're getting into the trade. You understand that. In order to do that, you've got to take all the courses that we offer at 13 market moves. Okay? Click the link below if you want to do that. But the point here is this. Does he have some bad trades? Yes, he's got a coin, 250 call. He's got Amazon, way out of the money calls. He's got 5 mRNA. So these 2 trades could have gone completely bust. And he would have still made 25 grand on this trade. Well, Leonardo, how are you coming up with that? Guys, these 240 calls, they were going for almost $50 right here. Well, 5 times 50, guys, the math is simple. It's just a bit shy of 25 grand. But look what happens. So I'm encouraging the guys, stay with the trades. Don't panic. Okay? Get ready for this. He sells right here. All right? Look at this. Wednesday. Hi, Leo. I sold all my position. Any place for today. What? Hold on. Didn't we just talk about right here? Stay with all trades. Don't panic. Now, this was on Tuesday. Stay with all trades, don't panic. Comes Wednesday, I sold all my position. Any place for today? Yeah, I gave you a play on Monday that you're supposed to manage and stay with it. I told you exactly. Don't panic. Stay with a fucking trade. Trader 2 gets out right here. So now notice how strong you actually have to be emotionally to stay with this trade. And I'm giving you some easy tips, guys, here. Stop looking at your P&L. Focus on the chart. Focus not on what the trade is doing right now. Focus on where the trade is going. So one guy, Trader 1, gets out right here on Tuesday. Trader 2 gets out on Wednesday. When? Right before the explosive move higher. He sells right here, guys. All of it. Now, here's the math. He had 5 mRNA 240 strike calls. He sold them Wednesday, okay? They were going as much as $49. That's 25 grand. I mean, round it. 25. Just a bit shy of 25. All right, let's move on to Trader 3. Trader 3. Okay, so I actually traded with this trader on Friday. He had a small account. We took some shots, trying to shoot for the moon, and so he lost half of the account, guys. So his account was $2,800. He was down to $1,400. Okay, so Monday, he's asking me any place today. What I say, mRNA, 235, 240 calls. Now, with $1,400, how much would he have been able to buy? About 4 or 5 contracts. Again, what would these contracts would have made this trader with $1,400? He would have made $20,000 if you would have just taken the trade. Now, here's the shocker. The guy never takes the fucking trade. Never takes the trade. $1,400 would have made him over 20K. So here's your Trader 3 who is sitting there and just simply is cherry picking. Well, you know, I've taken some bad trades with you, Leonardo, on Friday. Therefore, I'm not going to take this trade. Okay? Again, when I was showing you the probabilities, okay, you cannot change your methodology. You cannot start cherry picking just because maybe your first few trades, they go bust. All right? That's how you miss out on a $20,000 home run with what? With $1,400. $1,400. I mean, some of you that work with a decent size account, like 100 grand, I mean, 5 grand in this trade, I would have paid your car, would have paid your house for some people. Guys, don't be the guy that cherry picks the trade. Trader 3, cherry picker. Doesn't take the 20K trade. It's a 20X trade. Fuck. Take the trade. Don't cherry pick. All right, and here's your fourth type trader, which, by the way, you guys are going to hear from some of these traders throughout the weekend, some of the guys that, made some money, took some losses here and there. I mean, you're going to see it all, the good, the bad, and ugly. But so this is the trader right here who takes the trade Monday, stays with the trade. Now, I'll do a little spoiler. He sells some of it right here. Well, no shit. It's not a bad idea, right? I mean, you get in at 229 and you cash out closer to 255, 260 area. I mean, that's a $30 move. The guy is focusing on a bigger size move. And guess what? He doesn't sell all. He takes a little bit off the table and then he cashes out pretty much at the top right here. So the result, well, Trader 4 makes an excess of 20, 25 grand. So again, it doesn't take many contracts. It doesn't take a huge investment, okay? But look, specifically, I told the guy to stay with the trade by Friday, cash out, and that's what the guy does. So here's your difference between Trader 1, who jumps out on the next day after he takes the trade, Trader 2, who jumps out on the third day after he takes the trade, Trader 3 never fucking takes the trade, and Trader 4 stays with the trade, executes according to the plan, he gets paid. Now you probably wonder, okay, so what was the methodology behind the mRNA trade? What's the trade structure, trade process here? We don't have a ton of time to talk about it in this video, guys, but I will just shed some light on the main pattern, on the main bullish pattern right here. And so it's cup with a handle, right? So if you draw this out, this is your cup with a handle pattern. This is your breakout point. And we were sending messages to get in here. Why? Because of these confirmations. So it had a chance to break below this initial entry level, but we caught it when we saw some strong move on strong volume to the upside, and this was our entry right here. So we've been following this chart very closely for actually a few weeks, but we finally nailed this entry from where the stock broke out explosively, had huge momentum higher. And we stayed with the trade. Guys, it was easy to stay with the trade. Look at the volume. Just look at these volume bars, right? You've got somewhat decent volume, but then volume, each day the stock goes higher, volume is increasing. And it's doing it when? When the market is fucking dropping. The market is crashing. This thing is going explosively higher. MACD breakout to the upside. Bullish cross right here. A ton of other stuff. I don't have some indicators plugged in here, but again, we're trying to simplify this video. So visualize this pattern. It's cup with a handle, very bullish pattern. Okay, breaks out right here. The initial breakout right here. Some of the sellers were shaken off. Another move higher. Confirmation by the volume. Entry right here. That's the entry. All right, so let's talk about some other trades that had similar pattern but just didn't work out. I mean, this is probably the most unfortunate case for the week, guys. I had a trader that starts and loses 20 grand on this Amazon trade. Yes, no bullshit. This guy literally lost 20 grand, and I really feel for him. But guess what? He got the message to get into Amazon calls right here on Tuesday when Amazon was at 3,700. I was watching this Amazon trade on Tuesday, and basically, this 3,700, 3,690 area was a strong level of support after Amazon started moving substantially higher in the prior week. And I was watching this area as an entry. So I sent a message right here, get in right here. So at that point, Amazon was about 3,710, and he didn't get in. He didn't get in, and this move right here would have made him in excess of $24,000. And then we end up getting in the trade right here, based off the same criteria, based off the same everything, okay? This trade does not work out, okay? The guy loses 20 grand. So why was Amazon potentially a very good trade going into the second half of the week. I mean, clearly that did not end up the case and ended up being a bad trade. We had multiple bad entries on this trade, but Amazon, cup with a handle. I posted the video on July 5th saying the stock was going to break out from this cup with a handle pattern. So the pattern is identical. Okay, however, sometimes the behavior after a cup with a handle pattern is going to be such that the stock is going to pull back to a level near to that breakout point. And then it could resume the explosive move higher again. So we're near that breakout point. So the question is it going to move lower and, break for that level lower? Or is this going to be your ultimate second perfect buying opportunity on Amazon calls right here? So the trade, guys, same trade structure without going into a ton of details. mRNA, cup with a handle. Amazon, cup with a handle. Now, typically, most of the cup with the handles, they're going to run like this one. And I've been comparing this mRNA, guys. I did post a video on mRNA about 2 weeks ago on our channel. You can go back and watch it. I said mRNA is likely to resemble the behavior of NVDA. And I said, meaning it's going to go higher day after day after day after day. And it's going to seem like, well, this thing just can't move higher anymore. And it keeps moving higher. So look, NVDA, it's the same pattern, right? We told you to buy the hell out of it. All right, so here's your pattern. Now, recently we've been short NVDA. Okay, not so long ago we've been shorting it. And it's finally making this move lower. But the part right here with the cup with a handle, all right, notice the time frame. So almost for 3 weeks straight, uninterrupted, this stock just keeps moving higher and higher and higher and higher. So same pattern, same conditions, right? Bullish cross right here. All right, until we get a breakdown on this bear moment right here on the MACD. Now, guys, the pattern is identical in all three charts. What I'm trying to reference is Amazon could have done exactly what NVDA would have done right here. It should have gone uninterrupted higher day by day, not necessarily $100 a day, but Amazon could have made basically a pattern just like this. And so when we were looking at this trade right here early in the week, everything was confirmed, right? Everything was confirmed based off the pattern, based off the structure, based off the levels, based off everything. Amazon should have moved higher. But in this particular case, it's revisiting its breakout point right here. And we got a killer trade on Amazon for you guys next week. And so we have a ton of guys. I mean, I had guys from 3K to up to 50K right here in this Amazon trade. I know some of you missed it, so don't miss out the next trade. But the point is, the chart pattern is identical, slightly different behavior in the case of Amazon. So out of 3 trades, you've got 3 identical patterns, and it's highly reasonable to expect this sort of continuation. Amazon just fails the pattern after the breakout, possibly temporarily. Okay, so basically to summarize this, guys, all 3 trades, same pattern, same reason for the trade, and staying with the trade. But it does not guarantee 100% success on each trade. So what's the point? Don't cherry pick the trades. Take every trade. All right, so the only way to beat the market, guys, if I was to summarize it, is to focus on the outcome of multiple trades. Don't look at your situation as like, okay, well, I've taken 2 bad trades or 3 bad trades, or I've taken 1 bad trade and I can't sleep at night. I mean, there's some guys like that out there who's just emotionally, they turn into a total wreck after a couple of bad trades. If you are a trader, you cannot afford to do that. Imagine if you opened the business and nobody would show up the first month. What, would you close it down? I mean, maybe it was your dream to open a certain type of business, and you finally, after years and years of planning, you finally got to open it. And for the first month, you're just not having any luck, okay? For the first month, hey, you're losing money, okay? What does that mean to give up on your dream? Is that a reason to, not stay open for another month, maybe another couple of years? Because that's what it really takes in the business. You got to be in the business for a few years until you possibly finally turn profitable. Now, it's not for every type of situation, but generally expect some difficulties. Expect that there's going to be some time to figure things out. Don't expect, some traders, we basically take their account to the moon on the first few trades. But it doesn't necessarily work for everybody, guys. Okay, you could come in and you could be down on 2, 3, 4 trades. Just don't miss the 5th trade. So don't look at your trading activities from the perspective of one trade. Oh, it was a bad trade or it was a good trade, my account is up or down. Look at your trading activities as the outcome of multiple trades in a row, 10, 20, 50, 100 trades. Now, the only condition that has to be met, you cannot change your trading system. Whatever you've got in place, you have to stay 100% true to it. Or if you don't have a trading system or specifics that you look at before you get into a trade, and your entries, your exits, guys, you've got to get some help. You've got to click the link below, schedule a 20-minute coaching call right now, and talk to a senior trader here at 13 Market Moves. So you've got to stay true. If you're going to analyze the outcome of your trades over 10, 20, 30, 50, 100 instances, then you also have to commit to be 100% true to the trading methodology and execution each and every time. So you can't afford to change your process each time, because you will miss out on some $20,000, $30,000 trades. And that is with a small account. Imagine if you're working with a bigger account, what you could do. So at this point, you probably have questions. Okay, so where's mRNA going to go next week, Leo? Where's Amazon's going to go? Where's NVIDIA going? Okay, and more importantly, the question I would be asking right now, not where mRNA, Amazon, or NVIDIA is going, but specifically what earnings plays are we focusing on next week? Earnings season is here, guys. This coming week, it's going to be the big grand opening for the earnings season. We've got multiple weeks of incredibly great market environment. Don't miss out on it, guys. The opportunity is here. The question is, are you going to be a part of it? And you're sitting there thinking, but Leo, I missed out on this $1 special that you were mentioning in one of the videos recently, guys. I invite you to schedule a call, okay? I will do this for those of you that watch this video till the very end. That tells me that you truly, okay, want to move to a better place in your trading. And for that reason, okay, I invite you to visit right now, 13mmtv.com. Trade with a coach. Click the link right here. You're going to go to this page right here. $1 only. I'm going to give you guys a second chance one more time to those of you that have missed out. Now, after you pay the $1, okay, make sure you schedule a call at 13marketmoves.com before you begin, okay, getting the alerts or trading with a coach. You will need to schedule a call and talk to a senior trader before you get started. Okay, so with that said, guys, I hope this video was insightful about the chart pattern similarities and how the same trade taken by 4 different traders could turn into entirely different result. So if you want to improve as a trader, guys, I invite you to take the action to learn the 13 Markets Move formula, to get familiar with charts, patterns, and divergences. If you trade without it, it's just like trying to run if you're blind. You can't see anything. How can you run? It's a certain recipe. It's a definite recipe for a disaster to kill your account. So don't run blindly out there. Schedule a call at 13marketmoves.com, guys. I'll catch you on the next trade soon. Let's roll.